Welcome you all to the lecture video session on the different institutional support for MSMEs and the policies and the schemes of the central level institutions. And that we are going to discuss about special finance institutions, SFIs. Under special financial institutions, SFIs, there are three different type of institutions that are working towards the betterment of SSIs. The first one is the IFCI Venture Capital Funds Limited, IVCF. Second one is the ICICI Venture Funds Limited. Third one is the Tourism Finance Corporation of India Limited, TFCI. We are going to discuss them in detail, and the TFCI is that is SFI, IFCI Venture Capital Funds, the IVCF. What the IVCF does is that it is normally, and then formally it is known as Risk Capital Technology Finance Corporation Limited, RCTC, and it is the subsidiary of IFCI Limited. It was promoted with the objective of broadening the entrepreneurial base in the country, and it facilitates the funding to the ventures involving the innovative product, process, and then the technology. So initially it started providing the financial assistance through soft loans, and this got these soft loans under the scheme of risk capital scheme. So next in 1988 they started it providing the finance under technology finance and development scheme. So the first scheme was risk capital scheme and the second scheme was technology finance and development scheme. This technology finance and development scheme provided the funding to the projects for the commercialization of the indigenous technology for new process, products, markets, and or services. So with this basically IVCF focused on the innovations and the promoting innovations and supporting innovations through the finance. And the second one is the ICICI Venture Funds Limited. ICICI Venture Funds Limited, it's formally known as Technology Development and Information Company of India Limited, TDICI, and it was funded in the year 1988, and it was a joint venture with the Unit Trust of India, which is popularly known. And subsequently over the years it became a fully owned subsidiary of ICICI, and it is a technology venture finance company. It is set to promote the sanction of the project finance for new technology ventures, and basically the innovative technologies have been backed up by ICICI venture funds. The venture capital itself is for the itself says that this is looking for the new technologies and then the new ways of promoting the business. Basically this goes with the startups. And the third type is the Tourism Finance Corporation of India, TFCI, and this is a specialized financial institution. This was set up by Government of India for the promotion and growth of tourism industry in the country. So there were conventional tourism projects that have been there, but you can see that very interestingly the medical tourism has come into the picture, agro-tourism has come into the picture now with the evolution of these kind of funding facilities that is given to different type of tourism projects. Medical tourism has come into the picture now. So it provides the financial assistance for the non-conventional tourism projects like amusement parks. For example, GRS park, it might be Wonderla, like this, like amusement parks, ropeways, car rental services, and the ferries for inland water transport. All these, all these kind of tourism promotion has come into picture now, and basically Tourism Finance Corporation of India gives the finance for this kind of ventures. So the third type is investment institutions. Investment institutions basically goes with three different type of investment institutions: Life Insurance Corporation of India, LIC, Unit Trust of India, UTI, General Insurance Corporation of India, GIC. The fourth one is the Central Scheme, Startup India Initiative, Aspire, and then the Mudra Bank. So with the investment institutions, Life Insurance Corporation of India, LIC, it was established in the year 1956, and it is a wholly owned corporation of Government of India, and it was formed by Life Insurance Corporation Act 1956 with the objective of widely in particular to the rural area. So it also extends the assistance for the development of infrastructure facilities like housing, rural electrification, water supply, etc. LIC Housing Limited you might have heard, and like this it also participate in the development of infrastructure facilities. In addition to this, it also extends the resource support to other financial institutions through subscription to their shares and then the bonds, and Life Insurance Corporation of India also transacts the business abroad. So with this investment institution, LIC is participating in the different ways of promoting the SSIs. Next one is the Unit Trust of India, popularly known as UTI. This body was set up under the UTI Act 1963, and it is basically meant to encourage savings and then the investments. What it does is that it mobilizes the savings of the small investors through sale of units and then the channelizing them into the corporate investments, mainly by the secondary capital market operations. Primary objective of the UTI is to stimulate the pool for the savings in the middle class family, middle and the low income groups, and they enable them, UTI enables them to share the benefits of the rapidly growing industrialization of the country. So this is the main objective of UTI. The third one is the General Insurance Corporation of India, that is GIC. This was formed in the by the General Insurance Business Act 1972 for the purpose of superintending and controlling and carrying out of the business in the general insurance or the non-life insurance. Insurance may be for the life insurance, or it could be the non-life insurance also. Initially, GIC had four different subsidiary branches. The first one was National Insurance Company Limited. Second one was New India Assurance Assurance Company Limited. Third one was the Oriental Insurance Limited, and then the fourth one is United India Insurance Company Limited. But all these branches were delinked from GIC in 2000 and in the form of association called as GIPSA, that is General Insurance Public Sector Association. So all these four got delinked and then became working as individual entities. So after this, let's discuss about the central schemes. What are the three different types of central schemes? Basically, the interesting ones are Startup India Initiative, Aspire, and then the Mudra Bank. Startup India Initiative, Prime Minister of India launched the Startup India Initiative in the year 2016. It changed the definition of the startup in terms of the scale and then the horizon. So a lot of youth came forward to have their own startups with this Startup India Initiative. So the idea of this Startup India Initiative is to increase the wealth and then the employability by increasing the entrepreneurial spirit. So what they have done is that they have given startups a tax benefit to the startups. Under this scheme, they provided the tax benefit, and the 798 applicants have got the benefit of tax break. So this popularized the Startup India Initiative, and more people came forward to start their own ventures. The Department of Industrial Policy and Promotion has taken up this particular initiative and is working on this particular project. And moreover, the overall age limit for the startups has increased from 2 years to 7 years, and this for the especially for the biotechnology firms, the age limit is 10 years from the date of incorporation of the unit. So this is one of the best Indian government startup schemes for entrepreneurs, because it is providing lot of policies for the entrepreneurship programs. And what is Aspire? Aspire is the one the government has made continuous efforts to improve the social and economic life in the rural areas of India. So since 56% of the Indian population lives in rural areas, and the government is promoting the entrepreneurship and innovation in the rural areas. So the scheme Aspire, this aims at increasing the employment in the rural areas. It aims at reducing the poverty in the rural areas, and it aims at improving the innovation in the rural India. So the main idea of Government of India is to promote the agro business industry. And when it comes to the agro business industries, it could be the products, byproducts of agro, or it could be the products of agro industry, and it could be focused on the seed development, or it could be focused on any kind of byproducts of the agro products. And then the Ministry of Medium and the Small Enterprises try to get the economic development in the rural India through this particular scheme, Aspire. Let's see what is this Mudra Bank. Mudra Bank is nothing but Micro Units Development Refinance Agency. Micro Units Development Refinance Agency, Mudra Bank. This is created to enhance the credit facility to boost the growth of small business in rural areas. And Government of India has introduced this scheme to support for small business in India. You can see the vegetable carts, and then you can see the fruits that are selling on the carts. All these small vendors are benefited by Mudra Bank. And in 2015, the government allocated 10,000 crores to promote the startup culture in the industry. So with this Mudra Bank provides us startup loans for 10 lakh rupees to small enterprises, and then the business which are all non-corporate business, and it might be the non-farm product, it might be the non-farm small other micro enterprises. So it comes under Pradhan Mantri Mudra Yojana PMMY, which was launched on 8th April 2015. The kind of loans that have been categorized are into this under this particular PMYY Yojana are Tarun, Kishore and Shishu. And the assets are created through the bank's finance, and there is no collateral security that is required in order to take this particular loan under Mudra Bank. These are the developments that happened with the government intervention, and then the government interest in developing the startups, and then helping the people, small vendors to the large vendors, and then the small industries to the large industries in particular. With this, I close this lecture video session on investment institutions and then the central scheme. And let's see you all in the next video on Ministry of Skill Development and Entrepreneurship. Thank you everyone.